Hey everyone, welcome back to Corporate Decoder, where we decode the confusing world of corporate filings, and boy, do we have a filing that is a little bit of a puzzle today, full of amendments and late night fixes. Before we dive in, if you're new here, make sure you subscribe so you don't miss out on our regular dives into company secrets. And hey, we've got a fantastic Discord community where we chat about these filings and much more. So definitely check that out in the description below. Today, we're re-looking at Us Gold Corp. Latest report, an amendment to their previous 10Q filing. Think of it like this: they filed a report and then realized they needed to fix a few things, so they refiling an updated version. It's like sending an email and then hitting undo so you can correct a typo. This specific report is for the quarter that ended on the 31st of July 2025. So what exactly are they correcting? Well, the company is filing this amendment primarily to update their assessment of disclosure controls and procedures. This sounds a bit like corporate jargon, but it basically means how well the company makes sure that all the important information they have to share with the public is properly gathered, processed, and reported on time. They re-saying that in the original report they thought these processes were working well. But after looking again, they realized they weren't as effective as they should have been as of the 31st of July 2025. The reason for this change in opinion, it all boils down to a late filing of another document, an amendment to their annual report, the 10K. This delay meant that some important information, specifically the Part 3 information from the annual report, wasn't presented when it should have been. Because this issue didn't affect the company's financial statements themselves. They not changing any of the numbers or their conclusions about internal financial reporting, but it did impact how they track and report public information. To fix this, the company is putting a plan in place. They're going to formalize their processes for tracking report deadlines, build clearer procedures for identifying and meeting these filing dates, and provide more training to the folks who put these reports together. This is a good step, showing they're aware of the problem and are actively working to prevent it from happening again. They're not changing anything about their internal financial reporting controls, so that part is still looking good. Since this amendment doesn't involve new financial statements, they aren't filing new certifications for executives under Section 906 of the Sarbanes-Oxley Act, which is just a legal formality for when financial numbers are changed. Let's dig a bit deeper into what these disclosure controls and procedures actually are. Rules from the Securities and Exchange Commission, or SEC, define these as the systems and processes a company uses to make sure that all the information they are required to share under the law is recorded, processed, summarized, and reported within the set timeframes. It also includes making sure this information gets to the right people, like the Chief Executive Officer and Chief Financial Officer, so they can make smart decisions about what needs to be disclosed. Management always has to use their best judgment in designing these systems, balancing cost and effectiveness, and acknowledging that no system is perfect. Before we get into the core financial details, let's quickly touch on the company's stock. As of late September 2025, US Gold Corp had over 14 million shares of common stock outstanding. This is a pretty standard metric to track, giving us a baseline for ownership and market capitalization. Now, moving on to the exhibits, these are essentially supporting documents attached to the main report. We see a few interesting ones here. There is an amendment to a warrant agreement, which relates to certain rights to buy stock, and a sales agreement for an equity offering. Also, as expected with this kind of amendment, there are new certifications from the CEO and CFO regarding the accuracy of the filing. We also see the usual XBRL documents required for electronic tagging of financial data, which helps make these reports machine readable. Alright, let's get to the heart of the matter that everyone cares about, the financial performance. Even though this is an amendment focusing on controls, we can still find some clues by looking at the original report that this amendment refers to. While I can show you the specific financial tables from the original report directly here, based on the context of this amendment, the key takeaway regarding their financial health isn't about a change in the numbers themselves, but about the processes around reporting them. The fact that they are amending their disclosure controls indicates a temporary stumble in their reporting process, not necessarily a fundamental problem with their business operations or financial results for the quarter ended the 31st of July 2025. The report explicitly states that because the amended disclosures do not affect their financial statements, there is no change to the conclusion related to changes in internal control over financial reporting for that quarter. This means we should look at the original report for their financial numbers, and this amendment primarily flags a procedural hiccup. Essentially, this amendment highlights a governance issue rather than a financial one. It's about the honesty and timeliness of the information they're legally obligated to provide. Though it sounds technical, a late filing or an error in reporting can erode investor confidence, even if the underlying business is doing fine. It suggests that while the company might be managing its operations well, its administrative and compliance side needs a tighter grip. This is an important point to reiterate. The company is confirming that their systems for ensuring the accuracy of their financial statements themselves remain solid. This means that while they had an issue with reporting broader disclosures on time, the actual accounting and financial recording processes did not have any material issues that would affect the integrity of their financial numbers. So, what does this all mean for US Gold Corp? On the one hand, they've identified and are correcting a procedural flaw, which is a sign of good corporate governance, even if it happened after the fact. They are taking steps to formalize their reporting processes to prevent future delays. However, the fact that this was significant enough to warrant an amendment means Therese work to be done, to ensure all oversight mechanisms are robust. For investors, this is a signal to pay attention to how diligently the company manages its compliance and reporting obligations. While the core financials might be sound as suggested by the lack of change in internal financial controls, a consistent track record of timely and accurate reporting is crucial for building trust. For now, we cannot analyze their specific financial performance from this amendment alone, but the underlying issue seems to be about the administrative side of reporting, not the financial health of the gold mining operations themselves. This is a company that is actively trying to improve its processes, which is a positive sign, but it's also a reminder that even established companies can have missteps in compliance. Alright, that is our breakdown of US Gold Corp. Its latest filing. What is your take on these procedural issues and what they signal for the company's future? Do you think this will impact investor confidence? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And remember, our Discord community is a great place to continue the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.